Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending January 17, 2025. So the title of the presentation this week is this the calm before the storm? Because we know inauguration day is coming. It's next Monday, January 20th, and I was reading in the papers this morning that Trump's legal team has about 100 executive actions that are ready to be signed. Day one, of course, covering immigration policy, trade policy. So we'll see next week finally what we will get from the Trump administration. Maybe before we get into the topic, maybe let's look at this week's market, the close on a Thursday. So positive week for both stocks and bonds. Positive also for the price of oil. Canadian dollar was a bit stronger. The euro also higher. Price of gold higher year to date. Price of gold up 3%. Stocks, as you can see, year to date, mixed bag, but slightly positive. Returns negative for bonds year to date. So we have higher interest rates, somewhat of a good behavior from the stock market. But now that we will have some closure on the types of policy that we'll see from Trump, maybe the picture will be changing pretty quickly. So I could have brought 2 million charts on Canada and the US and trade and the relationship. So, but what better than just, a simple cartoon here from the Globe and Mail. Trump's team is ready. Canada seems to be disorganized. So far, we need a second here. This is what the quarterback of the Liberal team, which is, of course, Premier Justin Trudeau here asking the US, and we don't really have this second. So, the information that we have now and that seems credible is that next week, of course, these executive actions should be signed. We should expect some sort of tariffs on Canada, on Europe, on Mexico, on China. What seems credible that came out this week, and again, we don't know yet, but there seems to be a consensus among the economic advisors for Trump that they should phase in the tariffs. So rather than going with 25% blanket tariffs day one, maybe start and increase by 2 to 5% a month, so that just cushions the hit on US inflation, and also that leaves room for negotiation along the way. Because the problem that Trump seems to have with Canada and Mexico, it's mostly about the border. So if there are some investments by Canada and by Mexico to secure the border, and this is already ongoing, investments in security, drone, police coverage. So all of this, there is a light at the end of the tunnel that this could be negotiated away. But just in case, what we're hearing here is that from the Globe and Mail this morning, that there's a rapid consultation that could be announced by Premier Trudeau on about $37 billion of imports from the US. Should be about 2 weeks, and that would be covering the least painful kind of tariffs that we could put in place to retaliate against the US. And then depending on the size of those tariffs, we could have a consultation on another $110 billion of goods. So that would be the full retaliation. And remember that in 2018-19, when there were some tariffs on steel and aluminum, there was some retaliation from Canada, but it covered about $16 billion of goods. Now we're looking at about 150 billion, so about 10 times the size. So it's a sizable threat here. So Trump is looking at, again, overhauling the immigration system in the U.S. What will that mean? Big question mark. But, we need unity in this country. And we need a united front from our premiers. There was a joint statement that was signed by 12 of the 13 leaders of the province and territories. The only exception was Alberta, because they disagree with the threat of blocking the oil exports, and with good reasons, because you need an economic plan. There is some, you need to spread the load among the country. And of course, there's so much exports that are going to the US that if you give the US an incentive to just divert the exports exports from Alberta and just work on securing other trade partners that could be detrimental long term. So it's normal to have this fragility in the united front. What's the solution? We'll leave the politicians to figure it out. But of course, if we do ban the exports of potash, if we do ban the exports of electricity, of oil, of gas, or all any strategic exports like rare earths, also germanium from BC, we would need to have a concerted economic plan to make sure that we cushion the blow or share the load. That maybe it's a bit late here to start getting organized on this. So very complicated situation. We'll have more clarity next week, but we are preparing for this. In some of our funds, where we were structurally underweight the USD. Meaning that if we were exposed to a risk that the Canadian dollar depreciates strongly quickly next week, we did put in place some trades to cushion that blow. So we're active in that sense, but also on the discretionary side, risk reward long term, we do see the Canadian dollar as being oversold now. So we started buying also on a discretionary fashion, very small quantities, but we're active on hedging and also trying to find if there's an opportunity here. So we'll keep you posted in the next weeks and months how our thinking goes with this. But if I move to the next chart here, the picture at the beginning of the year on how things are expected to unfold this year on the macro front. So global growth is expected to slow down in China in 2025, slow down in the US. 2024 was pretty strong, so we're looking at minus 0.6 compared to 2024. So in 2024, the year is done, but all of the official economic data is not out yet. We're seeing growth of about 2.7%. The consensus now is seeing 2.1 next year, so that's a slowdown. For Canada, it would be an acceleration from 1.22 to 1.8%, so plus 0.6. Eurozone's accelerating slightly, but still growing slowly. In the world, no change. So this is the consensus as we're starting the year. Look at 2024 on the left. The consensus was pretty downbeat at the beginning of the year, and it reaccelerated, readjusted to better and better economic data as the year unfolded. 2025, will we see adjustments higher or lower as we move forward in the year? It all depends on how much the U.S. trade policy reshapes global trade and the impact that it will have on individual regions. So it's going to be a very interesting year for sure. And for markets, what's very important is the behavior of central banks. So here you have the Bank of Canada on the right, you have the Federal Reserve on the left. What's interesting is that we were discussing in Q4 of 2024 how synchronized the rate cuts were and how markets were pricing in synchronized rate cuts in 2025 as well. So now this has flipped on its head. Now the Fed is seen holding on Jan 29th, which is in close to 2 weeks. And after that, the odds that we see a cut from the Fed, it's a muddy picture. Let's say odds are significant that we could have some sort of cut maybe in September. But again, as you can see, the consensus seems to be, or at least here this is the market pricing, seems to be pretty wide. So maybe the Fed stays on the sideline for all of H1 of 2025. We still think that's a bit aggressive in terms of pricing. There is still some reason for the Fed to continue working towards normalizing its monetary policy, but it will depend on how Trump and his team surprise. Are they surprising with being more aggressive, or are they surprising because they're reaching deals left and right and we're avoiding the brunt of all of those tariffs and the inflationary pressures that come with it? Big question mark. We'll have some closure in the next few weeks. On the right, the Bank of Canada priced in to cut on January 29th, 75% odds. And after that, we still think that they should continue cutting and converge towards 2.5% mid-year. This is still our call. But as you can see, the odds here are getting wider and wider. So there's less and less certainty in the pricing of the markets about what the Bank of Canada should do. But we still think that there will be more cuts in the first half of the year in Canada and in the US. But at the end of 2025, maybe the US, the Federal Reserve, will have delivered much more easing than what's being priced in right now. So very interesting week next week. So what the data we'll be watching for, we'll have the CPI inflation in Canada. We'll have retail sales also. Inflation should be continuing to slow down. Retail sales should be down a little bit. If we look at the US, of course, on Monday, January 20th, it's Donald Trump's inauguration day. That's going to be the highlight for sure of the week and all of the executive actions that will come out of that. S&P Global US manufacturing and services PMI will be out, and existing home sales. Mortgage rates in the US have risen significantly. Now this could slow down some of the momentum that we're starting to see in home sales. So very important economic vector here. We'll be following that for you next week. So that wraps it up for the week. A big week ahead. So don't miss the next edition of the Weekly Economic Review.